What's going on, guys, right? It's Juan Pablo, Michael. We're having dinner at Taco, great spot here in Pittsburgh, Pennsylvania, right before the PNC game, right? Go Pirates. But we're talking business. We're talking about mortgage. So he's a preferred mortgage commercial advisor in the Pittsburgh market. But not only in Pittsburgh, you went nationally, correct?
Yeah, nationwide, yes.
Nationwide. So as we're conversing over some chips and guacamole, you began to tell us about some requirements.
Right.
We sent a lot of clients your way. So if you don't mind piggyback on that conversation we were having a few moments ago?
Yeah, so what I'd like to do, a lot of the clients are brand new to real estate investment, so I let them walk them through the process to kind of understand how a bank lender evaluates the whole process. On commercial, it's much different than residential, because on commercial, they're looking at you as an individual, your credit score, how much money you make, and also the asset itself. So I think you have to explain that to the clients, that a lot of the clients want to have very good credit, they have pretty stable W-2 income, and then what I have to understand is we can't get a pre-approval until you actually put a purchase agreement and understand what, because the bank's going to evaluate that property and look at the cash flow, because that cash flow counts, they count that towards the amount of mortgage you can do. So it's part of the whole evaluation process. So when I talk to them at first, I let them know what you're going to need to get to the bank, the time frame, and how that's going to work, and working with me and how we present it to the lenders.
And that's one thing most clients don't understand, because they're so familiar with working with residential mortgages, correct?
That's correct.
And 80% of their focus is on the borrower.
Right.
I want to see your tax returns, your bank statements, your W-2s, 1099, pay stubs. For you guys, what do you need? A personal financial statement, tax returns? That's it.
On the personal side, yeah, that's pretty much
side.
right.
But your main focus, your main priority is the property.
Yeah, it's the asset itself is as important, if not more important, than the actual borrower. The borrower's strength, it lends it to make it an easier deal to do. And obviously, if it's some weak bad credit or things like that, could make you get turned down. But if the asset's performing very well,
that's all that matters.
It makes the big difference.
Now, I want to throw some things at you, Michael, and answer it, because a lot of people have misconceptions about commercial mortgages.
Right.
First thing, do you need to have experience to go into multifamily?
No.
No experience?
No, you don't need it.
So if you're brand spanking new, you don't own your own personal residence, let's say you're a renter yourself,
right.
You never bought a residential property, you can go straight to commercial with you guys.
You could, yes, that's correct. I mean, it's good to have a good team around you, like Juan, myself, a property management company that's going to come in and help you lease those up, especially if you're buying outside your market. The banks want to see that, but yes, you can be brand new to the commercial and still be able to get it done.
Okay, another misconception. FICO score, you need to have a 720. Is that true or false?
That is false. On a couple of different fronts. One is that commercial lenders don't use the Fair Isaac FICO score. They have their own internal scoring, and they look at how many late payments you've had, the mortgage, and they look at your total. So they're not, FICO score gives you an idea of how you're doing, but it's not necessarily how the bank's going to judge you based off that score. They can do things lower than 720, and that people can get approved. I have other lenders, non-banking, that can be even lower than 640. So it could be on 580 or above usually, typically.
Okay, another misconception, or true or false. With commercial mortgages, a pre-qualification letter is unheard of. Is that true or false?
That's true.
That is true.
That is true. You just don't get pre-qualified in commercial work.
Okay, so I get that often, right? And a lot of our students, they ask us, well, how can I get around that? What I do is I say, hey, contact their preferred lender and he will vouch for you.
Right.
So do you do that with certain real estate agents?
Well, what I do is I evaluate the file and tell them, okay, based off my experience and my lenders, I can get you a loan. That's about the extent of what and it has to be based off, because they're going to look at the asset too. So until you have the asset, I can't get anything. It typically, once I get a full package, meaning all the information on the individual and what property they're purchasing, it takes about 2 weeks to get a commitment letter, typically. It could be a little shorter, sometimes a little longer, just depending on the complexity of the deal. But that's about it. So after the 2 weeks, you got a commitment letter, you order the title, the appraisals, you get ready to close in about 45 days after.
Okay, so once the investor has a deal, signed on the contract, executed,
right.
What documents, what package do you need per se?
Good question.
What does that include?
Okay, that includes the purchase agreement.
Okay.
Also would include the P&Ls for the asset, so that's the profit and loss statement for the last 3 years and a year to date. Sometimes that can be difficult to get, but it's important for that person to evaluate to see if it's cash flowing, because the bank needs to see what the expenses are, and the income. So they need to see the whole picture of the asset. So that's very vital for both sides, both for you and for the bank to understand that. You'd also need a rent roll, and you would need the leases, copy of the leases.
Okay, now another misconception. What matters most? The seller's tax returns reflecting the operating expenses on the property, or the borrower's tax returns?
The seller's tax returns.
Ain't that crazy? The seller's, and why is that important?
Because they have to understand the expenses, how that asset's performing. Without understanding that, it's harder for the bank to qualify that property and to say, okay, this isn't this, because banks are risk-based, so they're going to look at it as a risk. If they think the expenses are higher, it's going to lower the cash flow, going to lower the debt service coverage. So they're not going to either not approve it, or you might get different pricing based off of that.
Okay, so I just want to let you guys know that commercial mortgage advisors are not jerks. Because many people think you guys are jerks. Because you're like,
look at me, do I look like a jerk? It's a misconception.
Right.
Maybe, I don't know.
Most people think you guys are jerks because your conversation is, oh, where's the property?
Right.
Right, I don't care about you. Where's the property at? But once you have the property, they're well able to finance that deal for you as long as it's a performing asset. Any words of wisdom, Mike?
I think for me, when I talk to people, is don't fall in love with the real estate. Fall in love with the numbers.
Oh, that's it earlier. How about?
Don't worry about if it looks beautiful. If it's cash flowing, that's the property you want to go for. It's about a return on your investment. So you have to look at that in those words.
Marble countertops.
Doesn't matter. Unless you get more rent from it.
Stainless steel.
If you get more rent, if it generates more rent and it gets a return, then you do it. If not, you don't need it. So it's all about the return.
It's all about the return. You have to brace. Feeling so lit right now. It's always been my dream, my goal, personal goal, to come to PNC Park. Am I a fan of PNC? Not at all. But baseball, just the view, oh my goodness, it's amazing. It's about time. 100% finance is actually in the building, right? Downtown Pittsburgh is beautiful with the scenery, a lot of nice shops to go to. We just ate at Taco, a great restaurant. Butcher and Rye has the greatest drinks. But just the aura, the atmosphere, the people, it's amazing, right? Now, I don't come to Pittsburgh simply because of the culture, which is great. I come here for this, the money, right? I come here for the returns. I come here for the opportunity, and guess what? You should be here too, all right? So we're about to go check out our seats. Where we located, Brandon? 113. We're not in the rafters. No, we don't roll like that. We up front and center. So we're looking at them warm up. Look at them. Look at them, Joe. Look at them. Look at them racing. Look at them. I bet you I can beat any of them guys out there. This is dessert, by the way. We just had the main course with an appetizer. Now on to dessert. Cheat day. That's how you do it when you have one meal a day. You gotta treat yourself. Don't you love yourself? Shout out to Ghost Productions. Shout out to Ghost Productions for sponsoring this event. He's an amazing guy. His team is very well lit for getting us these great seats that we're about to enjoy. All for you guys.